Hey guys, good afternoon, good evening. It is Wednesday for your midweek video. So I'm gonna go to the market, and then I left these alerts here from yesterday and today. So there's 64 alerts that I haven't seen, and I want to kind of like I always do, kind of crystal ball it scenario where we go through it live and see what would have happened, especially with a down day yesterday, such a huge down day yesterday. I wanted to see, these alerts. Like for example, I let this one on because I opened this one just to kind of take a look at it because this really good company today. It was up 8% today. So if you would have taken this on Monday, which is when the alert hit, and I gave it to you guys on this one, you would have been down a little bit on yesterday, but you wouldn't have gotten stopped out. You still above 21, you still above the entry price, and today you would have been up 8%. So again, even on ridiculously bad days like yesterday, I mean 600 points down, like the largest drop in a day since June of 2020. It was historical. As long as we pick good stocks and we're in good industries, and, we're in the top, 40, 50, 60, 70, groups, we're in the good stocks, we're going to be okay. So this is why I stress on my scans and the list that I give you. That should be your inventory. Don't go outside of that, because those are the stocks that are working. And when you have down days, they have relative strength. And when they work, they work. Perfect example. You were up 8% today. You were up another probably like 3 or 4% on the day you took it. And you were probably down, 3% yesterday. So, on a 600 point down day, you're basically flat. That's not that bad. And then today you have nothing, an 80 point up day, nothing, no big deal. And you're up 8% on the stock. So, again, just adhere to the rules, and make sure you trade within the discipline of your system, and most importantly, you have good inventory. Your merchandise, it's solid. Okay, so let's go through the Nasdaq. Again, I mean, the good thing about everything, guys, I mean, if you think about it, we were still in this uptrend. We're still, we're still on higher lows. Even yesterday's vomit was higher than this low. So this uptrend is still, uptrend, but this trend line is still intact on the upside with higher lows. So that's not too bad. Again, we gapped down here, so the good thing, like I said, this gap will get filled. We're still below at 21. We're still below at 50. At 21 just crossed over in a death cross scenario. So there's some room for improvement. I threw in the 9 EMA just to give me some kind of very short term, kind of like volume weighted average kind of like scenario. So we're still even below that. So we're not out of the woods, but this could be a dead cat bounce, like I said yesterday. It might not be tomorrow it might just fall off again and, take out this low, and then we can head down here. Who knows? But take it day by day. It was, yesterday was a 600 point down day, and I had a pretty decent day. And today was an 80 point up day, and I had a pretty decent day. It's all, where you're at. How are you positioned? You have to be on the right side of the market. Does that mean you make money when it's long and you lose money when the market goes down? No, you can make money on both sides. It's how you're positioned. Or at least you can make really good money on one side and then not lose any money on the other side. So that's a formula for great success. Let me reactivate this little uptrend here. We did kind of touch it. We kind of touched it. So that's why it got activated. But we really didn't technically break it. So again, we're still down in all these scenarios. So it wasn't decent volume. I mean, it wasn't as high as yesterday, but it was kind of like up with with the moving average. So again, it could just be a dead cat bounce. Who knows? We might get back up here to the 21. We might even get up here to above the 50 just to kind of say hello, fill this gap, and then come back down again. Like I said, have a low in mid-October. And again, this is not gonna go like this. It's gonna probably do something like, it's gonna do kind of this, and then put a low in, and then take off, mid-October, late November, December, kind of thing. So that's kind of what I'm looking at. So let's go through these guys. See what we got. Okay, right here. Yeah, I mean, technically, I would still be in it. This will be probably my stop right here. So when you got the alert on Monday, you're still in it. You're up for the day. So if you want to keep track at home, we're 1 for 1. Actually, 2 for 2. CRK. Let me see this one. This one wouldn't have stopped you out. I mean, you're still above that low, and you're still out of the 9 EMA and way above the 21. You're still good on this one. This one alerted you on yesterday at the beginning of the day, and then you vomited down. So yeah, definitely this would have been a stop out. So you probably would have taken a 0.5% loss on this one. I did have this one. I took this one back here. I took it back here. That was my entry. I had QSR. That was my entry. And then I took profits on Monday, and yesterday I got stopped out when it broke below here, and I made about 6% on a half, and I broke even on the other. So overall, a 3% gain on the position. This one definitely would have gotten stopped you out. So Monday you took it. Yesterday you got stopped out, and then you're also down today. So that was definitely a little bit of a loser. This one you probably got stopped out. Yep, you got stopped out on this one too. So again, the market controls everything. This was a nice little breakout right here. Take it on Monday, you probably got stopped out. This would have been the entry. You probably still in it. This one gave you a little head and shoulder fake there, and then it stopped you out. You definitely wouldn't have been around for these last 2 days. So Monday, I definitely would have got stopped out. Monday, Tuesday, and today. I would not have been in it for yesterday or today. This one got you stopped out. So we're probably even right now. This one got you stopped on the same day. On the same day, you got stopped out. This one, you're gonna be holding the 50, but probably stop you out. Yeah, this one I had the alert on the downside. So this wasn't one that I kind of put it on there to see if it's near 21, and then it bounces, I'll get in it. So this wasn't a buy. You're probably still in it, holding the 21. You're in it, still holding the 9. Oh, you got stopped out. You got stopped out yesterday, big time. You would have avoided all this massacre. That's why stops work, guys. It works. This one, you probably 50-50. Yeah, still in it. Oh, that was a spy. That was this one over here. Let me reactivate that because it did kind of touch it, but technically it touched it, but the trend line is still solid. It's still above this low. You're still in it. You're 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 definitely in it. So we got some winners. We got some good winners. Look at that. Oof. Up 7% today. CTRA. Nice one today. Look at that. Oof. Look at that. If you take that right there, you're up nicely on this one. Nice. LNG. Nice. Back-to-back days of really strong. Even yesterday, it was up in the day. These trend lines work, guys. Good inventory. Good stocks. If we pick, if you shop in the right store, You're gonna get good merchandise. That one got you stopped out. That one got you stopped out. That one you still in it. You probably got stopped out. This one would have been probably somewhere right there. You still in it. That one probably still in it. You still in it. Got you stopped out. Even though you still got higher lows, but I probably would have gotten stopped out. This is the one that kind of gave me this. So I think I took a little bit of small position on this one. I got stopped out immediately. I think I lost like, I don't know, like 18 cents on this, like $18 on how many shares. This one, it kind of, it kind of triggered, but I probably wouldn't have taken it just because of the low volume breakout. I like to be above 30%, 40%. This one definitely would have got you stopped out. You would have gotten probably stopped out today. That would have been a nice one right there. Boom. Stopped out. Still in it. That's the same one as I discussed. DVL definitely got stopped out. If you took it at all, I probably wouldn't have taken it this day. Most of these alerts, came in on Monday, and if you notice, they came in on Monday. This is yesterday. This is today. So if we were taking it on Monday, you might still be in it on Tuesday yesterday because above the 21, and then today you kind of got it back and then some. That's why you have stops. Yes, that's why you set up your stops before you put the trade on. So in this scenario, let's say I would have gotten in here, my stop would have probably been somewhere right there. So I definitely would have been stopped out or on at least half of this position yesterday, if not all of it by the end of the day. And today up 5%. So you never know. But you trade the probabilities. This didn't trigger. This triggered today. This triggered today. I definitely would still be in this. This triggered today. This triggered today. You still would have been in it. And this triggered today, getting above the 50. This could be another entry above 40. Above 40, probably a nice add-on for this. And then you have a stop, with this prevailing 21 or even 9 EMA. Okay? So that's it, guys. And then these are the ones that I gave you the hot watch list. These are the ones that I currently have. I have a little bit of TRQ. It's holding up nicely right here. And this little shelf right here is consolidating. Something like this. I'll probably add to it somewhere here. And where's my stop? My stop is right there, 29.78. I'm not even gonna let it get to the 21. Because this gap up right here. Let me see what else I got. I got VRDN. I got some VRDN. I picked it up. I think I went on a lower time frame in this one. Yeah, I think it was somewhere around here when it broke. When it came back, and it kind of somewhere around here. I'm not sure. I bought it somewhere around here in the 22 and a half, 22 and 3/4 kind of thing. So I'm flat on this one right here, but it's kind of holding up nicely. I'm at add right here. But you see, 21 holding up nicely. So this would high low, as long as the trend continues. See, every low it's higher than the previous. That's an uptrend by definition, right? And when do I get out? When then this starts going over here. So when we have a bar over here, now this low is lower than this low, so this uptrend is broken. I am out. Okay. In essence, if you would have taken it back here, right here, instead of gap up at 15, you're at 23. Even instead of cup and handle right here, you took it right here. Okay, what else? I got EVH. I took EVH today. Today when it broke above yesterday's close. So I'm in it right there. I have a little profit, about 1.5% or so. Again, the 9 is going to take me out of half, and the 21 is going to take me out of the other half. Okay, but look at these stocks, guys. Look at these stocks. Look at this, right? This is a power trend above the 21. This is a power trend. Look at the market. Look at the market. And look at this stock. That's called relative strength. Okay, it's a 97 relative strength. That means it's performing on the 97 percentile to the whole entire market. That's why we only buy quality merchandise. And how do you know it's quality merchandise? Because I scan for it, I put the work in, and I spoon feed you guys the list every week. INSW, it's another one I have. Took that one yesterday. Not yesterday. Yeah, I took that one yesterday because I put it on there. It was showing great relative strength. It was up yesterday. It was up yesterday on the day. So when I saw that this was up on the day on a 600 down point day, I picked up some. Where was my stop? My stop was right there, low of that day. Extremely, extremely low risk entry. This would have been the perfect entry right there. So I'm in it today. From yesterday, I'm holding it. I'm taking out half when it breaks the 9, and the remainder when it breaks the 21. TNK, I have this. Boom, there was my entry right there. I've had this for a while. Look at this, it held very nicely yesterday. On a 600 point day, this thing was down like maybe $1 or less. Not even $1, probably like 48 cents, 50 cents. And today, up another 5%. Nice. Look at this little base right here. Beautiful. Beautiful. Right here, right? Or even like this trend line. You buy it right here at 19, you're at 28. You've almost doubled. Look at this one right here, right? These are the same patterns, guys. Same patterns. You buy it here. You buy it here. You take some profit. You buy here, you take some profit. You avoid all this. You don't get involved in any of this, and then you buy here, you take some profit. Then it breaks down right here, it breaks down right here. You bought it at 18, and you get off at 24. It's a 5-point move. That's not bad in about 2 to 3 weeks. That's tremendous return. Then what do? You buy here, and it's the same thing. You just keep buying these setups. It's the same pattern. If you notice, this is the same pattern. You have a little base. If you want to cheat, you would have bought it right there. Little early cheat entry, right? That would have been it. Right here, see a flat base? You see this little squeeze? Boom. You have a squeeze and you buy it. Right here. This didn't even kind of give you, didn't really give you a little squeeze, but this right here is kind of trending down, the handle. Boom. Quality merchandise. And then I also picked up a little bit of Suave. This thing, yesterday it was up on the day. 600 point down day. And this thing was up on the day. That's just extreme relative strength. And again, earnings per share, they're just crushing it. They're crushing it, guys. Look at these numbers. Look at these numbers. From negative to positive and increasing. That's why I scanned for next year turnarounds, 50% or greater growth, and the following year turnaround, and you have 20-25% either sales or earnings growth quarter over quarter. That's the blueprint for success. You buy this gap up at 240, you get you 50 points up in a month. That's amazing. Then again, you could add to it right there. See the trend line right there? Buy right there. This trend line breaks, you buy it right there. Where should stop? Right there. Or you have this up trend line and you get stopped out on half when it breaks this higher low trend line. Okay, that's an easy trade right there. It's an easy trade. Don't be afraid of a $300 stock. Okay, if your risk tolerance is let's say you want to only risk like $100, $150. Okay, so instead of buying 100 shares and give it $1, you buy 10 shares and give it $10. It's the same risk. So let's say you buy 50 shares and you give it $250. You're gonna be, about $125, stop. I would probably give it a little bit more than that. This is a, high volatile, not volatile, but like high volume, high price stock. So, 3-4 points, it's only a percent. So you want to risk between, let's say 2 to 3%. You're risking $6. If you don't want to risk $600 to buy 100 shares, you don't want to risk $300 to buy 50 shares. So you risk $150 and you buy 25 shares. You get 25 shares, the same thing. You're going to get the same percentage gain. Because if it goes all the way up here to 315, you're still going to make your 16 points. And if it goes down over here to 280, or actually not even 280, your stop will be right here at probably 285. You have 6-point drop. That's about $110 to make about 300. That's a 2-to-1 ratio. Okay, so that's how you trade. So I hope this makes sense to you guys. Yesterday was a vomit. Today was a little dead cat bounce. Let's see if it is a dead cat bounce tomorrow, or if we don't have continuation. And if we have a little bit of a continuation tomorrow, then hey, keep on raising your stop if you have anything. Take the same setups, just take a little bit smaller positions, just because we're still under the 50, we're still under the 21, and we're still in this channel. Okay, we're going higher lows, but we're in this channel until we do this, and then we do this. We're not in an uptrending channel. We're still in a downtrending channel. Okay, keep that in mind. So if we do this, what does this mean? We're back out of the 21. We're back out of the 50. We step on the gas pedal a little bit. All right. Hope this makes sense. Have a blessed evening. If you have any questions, please ask me. I'm here to help. Talk to you guys on the weekend video.